Okay, guys. So what we're going to do is we'll actually probably just go, give me a second. Had some notes here. Just have to find them. Okay, cool. So we're going to go over to yesterday's PA. And again, towards the end of this session, if we have time, I'm sure we can make some time, but we'll jump into just like this little piece right here that I was kind of looking at. I think we're going to kind of make a double top here. We could very easily see a nice pullback off of this. We could very easily see a nice deep pullback even to the 50% of the leg, the equilibrium down here. And then obviously have equal highs built to be able to facilitate new highs. But let's look at yesterday's PA and just kind of deal with that for the time being. So ultimately, the leg that I was sort of looking at in terms of yesterday's PA was, okay, well, we keep making a series of, low, created high, created low, created high, created low, right? So if that's the case, the highest point before we've broken structure right here, the first move we're going to do is just say, okay, well, where are we at, right? So you can see, oh, I actually, you know what? I didn't take this because this is actually the leg that broke structure was right here. And that's why I was looking at these higher time frame potential sells. So let me just kind of back price up to, let's go like this, 7, 6, 7 o'clock, right around here. Okay. So looking at this right here, the first thing I looked at was, okay, we're in the premium of this smaller 15-minute leg, which gives us reason to believe that we should be able to take some sort of a sell. Whether or not we're going to take out the low is another thing, but we're going to talk about how to manage these things, how to put yourself in a position where you can at least take some profits off the table. Not every trade idea is going to run to TP. It's all about management. And I think this is kind of where we're at right now. We can talk about seconds probably tomorrow. I think this is just a good way to kind of kickstart the weekend for us. And then we'll look at some seconds entries that I took earlier in the week. I just have to go back through my log and stuff like that. So right now, I'd like to obviously keep this nice and interactive for all of you guys as well. If you guys just want to kind of, it should be pretty simple here. Let's go over to the left-hand side. You can see that we've, essentially broken structure right in this area right here. So obviously, we should have, in theory, been looking for something a little bit higher in the leg. But here's the thing, we as session traders, we need to look at what's available to trade during our session. And one of the things that I really wanted to look for was, okay, well, where's the imbalance? So if you guys want to just map out where supply kind of controls this market from in the short term, that'd be awesome. Let's keep this nice and interactive. Yeah, this is where the imbalance kind of sits. So we have reason to believe that the market should react to this level. Now, ideally, what we want to see in something like this is, we want to see some sort of a take on liquidity followed by a break of structure. And in all fairness, today's PA, the way that we saw things, we didn't really get that delivery on that. And I found myself kind of chasing around the market on the 1 minute. Everything that I teach you guys or try to teach you guys to do, I found myself kind of being the noob today and chasing around. It's a good thing I had a little bit of self-control because, in the past, earlier this year, the tail end of last year, I would be chasing around the 1 minute chart. And let me tell you, man, it's not fun. It can really, really crush you really fucking quick too. So obviously we can see that we're in the premium. So what I want to do is just kind of get rid of this, clean up the charts a bit. So we have this break of structure right here. Okay, so we're reacting to this sort of area in here. Now, the big thing that needs to be noticed is where does structure, within this leg right now, obviously we've created the high. So what needs to break, right? We're in order flow that is bullish. It is counter trend, but ultimately the bottom line here is, okay, well, if we need a change in character to be able to really show that supply is truly in control of the market from here, we should see at least this break at the bare minimum. You know, like this would be, you know, a huge break of structure, you know, then maybe come back into, that's a story for another time. But, you know, the bottom line is, you know, this needed to break. This level right here created this level right here. Okay, so if that didn't break, really, you know, you should be looking for, you know, maybe a push higher followed by a break, right? Like that's kind of where I was at when I got on the charts yesterday. Now, so funny, this setup delivered perfectly yesterday, and today was the same fucking, basically the same thing. We're in higher time frame supply, above liquidity, and you know, I don't know what happened for me today. I got into some trades, and one of them was just really silly, and we'll talk about that a little bit later on. So at this point right here, you know, ultimately, you know, we got this low point. So what I want to do is just kind of map out where the low is, and this is typically what I'll do. I'll map this low out. So that when I go down on my time frames, I can say, okay, well, you know, until this low breaks, there's nothing I can really do. And you can just see like the nature of how this is kind of moving into here. It doesn't look like it's going to break. You know, we kind of have this corrective behavior. We can maybe go down to the 5 and see this a little bit better. But you can just see like it's like tried, and ultimately, you know, this is kind of like the sauce right here. If you got on the charts around 7 o'clock, you know, we're reacting to this sort of, you know, we'll call this entire area demand. Again, it's a POI. It's, you know, we could really refine this down to a 1 minute if we really wanted to, but ultimately this entire area is kind of where that demand was. Let me just kind of do something like this. And I got on during London in this, but took a break even. Break evens are good, Zen. It puts you in a position where at least you can view the market, right, as a spectator, and try to understand it a little bit better. So, okay, so we come down into, we'll call this, you know, our little 5 minute POI. Ultimately, you know, there's a very small leg right here. You know, we're well into the discount of the leg. Not a great place to be taking longs from, in my opinion, this close and coming off of higher time frame supply. Ultimately, you could have, but I think the better way to go about this would have been to wait to see what ends up happening around the top end of things. So you can see, you know, this is actually not too bad of an area if you would have potentially put a limit on this block. And the reason why this would have been okay is because you can see that this guy right here, we've actually, you know, swept liquidity right here across these lows. We've tapped down into this block down here. Yeah, we got some trend line, you know, or built up mitigations. I get that. Like I said, this is not a high probability setup for myself, at least. These are not setups that I particularly like, especially this high up in price, for the same reasons we didn't take longs today in price. So what I saw, you know, you can see that obviously, like, we have this little demand level down here, and then ultimately, you know, we've had this, you know, sort of changing character right here, right? Let's just go like this. So if we've had this chalk, you know, ultimately the low down here, in theory, should be strong. And the reason it should be strong is because what do we got resting right here, right? We've got a whole bunch of equal lows, right? Equal lows, some liquidity. So if we have a bunch of equal lows and that sweeps down and then breaks structure right after, you know, now we have a little area of liquidity that we could induce, right? So this is shaping up to potentially be a viable trade idea, right? So doesn't mean that you needed to take it. It just means that, you know, there was something available here. Now, in terms of targets, you know, we're not looking to, sorry, can I ask why you didn't consider the M5 chalk while we were reacting to higher time frame? The M5 chalk right here, the one that I'm talking about, Joe? I wasn't on the charts then. That's the only reason. I start right here, right? So I'm just kind of, that's the only reason I'm talking about this, is because this is when my session starts. Had I been on the charts, I might have considered this. But yeah, again, this is just what, can you switch to a 5 minute? Yeah, let's look. Okay, hold on, let me just get this in order. Okay. Okay, so changing character right here, and then look for sells. Well, let's get there. Let's get there. Let's look at this right now and let's see what ends up happening, right? So this would essentially now, because we've, okay, you're right. You're not wrong at all, right? But right now we're in the demand. So if we're looking for a supply trade up in here, okay, and let's put that narrative together right now. If we're looking for a supply trade and we say, okay, we've basically had equal highs, right? Equal highs. We've induced these equal highs, and that creates what for us? It creates some sort of a POI, right, for us to be able to trade from. So let's go like this. Now, question for you. If we can't take out the structure low right here, right? What do you think is going to happen? That's kind of what I'm getting at. It doesn't mean that we're going to blast through this, but it will typically mean that, okay, we've ran all of this, we've induced all of these POIs, we've come down, we've swept into the deepest portion of it and then changed character. Well, that's basically showing that this low is going to be strong for the time being. And that's the only reason you're not really looking. You can have this resting here. You can have your supply zone resting here based off of this initial break. But like I said, if this didn't come right away like this and push down, chances are, we're building liquidity here to be able to push upwards. That's how I view it. Again, let's keep our POI here just for the sake of it to see if there's something that would have delivered within this. I don't think there was, otherwise I probably would have jumped in. But let's just look. So we've got this change of character. We've essentially swept the equal lows, right? Let's get this nice and clean. Swept the equal lows. We've induced this little area right here. And now what we've done is come back down into the extreme of demand that took liquidity, right? So there's demand resting here, right? So demand, if we are in a demand POI, right, that essentially put us into new structure highs, whether it's a liquidity take, the only way that we can consider this a take on liquidity would be if we would have broken some sort of substantial structure, right? Especially because order flow on our 15-minute structure mapping is technically bullish, right? We're not bullish. But we are higher time frame, we are bearish, right? So in my opinion, this would become a weak high based off of the change of character that we've just had, right? So let's look at this and see what's going on. And again, order flow is bullish in the short term. So let's just see what happens and see if we can push through here. Okay, we've basically come back down. Entry, could have happened right here. Let's just look at this right now. And we'll take the 50% of this wick. Everybody understand that? We've got this very, very small change in character right here, right? Printed equal highs, came down, small supply turning into demand almost. So let's just see if there's something available here. And call it a 2-pip stop. Okay, just to give us enough. And all we're going to do is target the weak high, right? That's all we can do. So 1 to 5, if that's something that you're interested in taking, there's no problem with it. But ultimately, we're not going to be chasing this trade any further. If we start taking off from here, we're just not going to even bother with it because technically it's just not a super reliable move. So we didn't get tagged in. So at this point, once we come up into here, this is just getting removed. I'm looking for a better move to come up. So let's just see what ends up happening up in this region, up in the high right here. Now, again, because this low created the high and then this low failed to take out, or sorry, this high failed to take out this low, ultimately, this is likely going to get ran. Doesn't mean it will for sure. It just means that the probability of it happening are far greater than us reversing from here and coming through the low. We do have tons of liquidity that's going to facilitate the larger move at some point or another. But ultimately, what it boils down to is we're going to need to get rid of all of the buy side liquidity before we can actually target this sell side. And that's typically how all things end up working out. You'll usually see a decent size sweep before kind of seeing these pro trend moves. So let's just play price through. Okay. So we start to get a reaction at equal highs. now, what you can do is just kind of say, okay, well, now we have cause for price to continue going higher, right? We have all this liquidity kind of built up like this. Okay, pull back. Sweep that low. Okay, something like this, I would probably be comfortable just grabbing a little entry right here, provided we had a higher time frame target. Obviously you can see like on a very low time frame, it would be a push up that kind of broke through whatever the hell it is here, and then ultimately we've got this low, failed to take the low. Look into this area right here. You can see that we've now taken out a small little, probably on a lower time frame supply. Not a huge fan of this entry. Obviously this high in the leg, we want to be getting into stuff here, but it's just going to show you how it kind of ends up working out. We've got this little break of structure. We come down into this little piece right here. We'll see what ends up happening. Yeah, so there you go. It's just for, kind of informational purposes. I'm not telling you to get into trades there. It's just so that you can kind of see. So what do? We build more equal highs, right? So as we build equal highs, we build liquidity, right? So here we go. Okay, so we've essentially, let's get rid of all this shit. Get rid of this. Obviously that was liquid. So we're now into the high. So that basically has solidified that this low has been strong. We've broken this area right here as well, come into the low, equal highs, lots of liquidity resting. So the next place to look is going to be somewhere above this for me. And this is kind of how I approach it. Can you see something deliver in here? Sure. But guess what? This low is going to have to break. We're not just looking for some random seconds flip here. There needs to be a reason, right? And ultimately, the low that puts us into this area is sitting right here. So unless this breaks like this, there's no way to trade from here for me. And there's no way to put a limit because this did not take out structure low, right? This is the lowest point before we broke structure. So that's how I see this. And again, do with it what you will, but this is just a very, very low probability setup. So the higher probability setup would be to wait until we break this high, if and when we do, and then see some sort of a delivery and say, whoa, look at all this liquidity that we've now generated down here. We should be able to navigate down towards this. And then from there, we can start looking and stalking the market on our entry time frame to say, okay, well, now I'm going to start looking for what it is I need in my entry criteria. And that's exactly what that trading plan is for. Okay, so let's do this here. Okay, to no surprise, we end up breaking the high. This is not actually supply. Why? Because we couldn't take out 15-minute structure. And remember, it needs to pertain to, because technically we are changing character. We're changing character from bullish, right, counter trend into bearish. So we need to see that 15-minute break to be able to say, okay, the actual tides have changed. And there's absolutely no point in jumping in on a random 1 minute break of structure. So we've now basically broken just to stay above this high. So now the only way to solidify this, anything that happens up into here as a sweep would be if we take out structure, right? So now look at, we've technically broken above here, correct? So if that's the case, now this can get moved to somewhere in here, right? Where's the lowest point? And it's right here, right? There's the lowest point before we've essentially broken structure. So now what I want to do is say, okay, well, I can't even get into a trade up until I see something in there, right? Cool. Let's play price and see what happens. Watch how it builds. Okay. There's probably something on the seconds chart in here. No reason for it. Okay, there's really, really no reason to be getting in this early. Could you? Yeah, you could. But ultimately, man, we're looking for a higher time frame move here. If we just kind of zoom out on this entire move, ultimately what we're looking to do, where are we looking to trade into? Once this sets up. If we get a higher time frame change in character, there you go, thanks. This is the logical area, right? This is what makes sense. down into somewhere in this level, taking partials off here. I'm going to show you how to adapt to the market and stuff like that. But ultimately, this is the bottom line. I mean, we have tons of mitigations built up. Yes, we're in higher time frame demand in here over the left-hand side. It's not demand because it didn't take out any actual structure. It didn't actually put in a new high or anything like that. But it's a small piece of unmitigated down before up move candle, right? So just keep talking about this. But ultimately, something that I would be looking to target would be going like, okay, well, technically, in theory, we've had a, break a structure here, right? So if we've broken structure, then it's like, okay, well, if I want to take some profits off the table, where do you think a good place would be to start? Probably at the 50% level, right? Somewhere in and around this region, because if we start pulling back to potentially make a new high and we break structure here, if and only if we do that, and then we come back up to mitigate, where's the next logical place to be able to potentially look for longs from? If you were on the bullish side of the market, it would be in the discount of the actual leg, right? So the only way that we can do this would be, okay, well, and this is what I ended up doing, is I ended up taking 50% of my profits off at the equilibrium of the leg. Because technically we broke a small bit of structure. So it's a good thing I did, because this thing ended up fucking flying on us. But it is what it is, upwards and onwards. And you're not going to win every trade right to actual TP. You just have to be able to adapt to the conditions and, not marry your ego, because that's going to get you in all sorts of trouble. Okay, so the level that needs to break for a true change in character would be the level that put us into the high. Speed things up. Okay, let's see if that happens. Okay, not demand, there's nothing left. So this is like your first indication that we're probably going to see a chalk. And the reason I say that is because, in all fairness, we should have seen a reaction here. We didn't see anything. So if there's no reaction whatsoever at this level, that's indication number one. Now, you don't need to be first. You need to get in to something that kind of correlates with your entry criteria. And for me, looking at stuff like this, looking at random bits like this, looking at random bits like, no, what we want to see is this break, and we want to see the leg produce itself, and we want to see what's in the premium area of the leg if and when that happens. That's how I was stalking the market today as well, watching, and it ended up delivering a setup, and it just didn't go. So see what happens. Okay, we got demand. Technically, let me just go like this now. Okay, so this is demand. This is the, oops. This is the area right here in which, in all fairness, if we were inducing, like let's say this level right here coming down, we should be able to see a flip that puts us up into new territory high, right? And if that was the case and we saw something like, like this, maybe you could look for a trade. Personally, with all the equal lows building right here, there is no demand trade for me. This is no bueno, man. You're just asking for trouble. One, you're trading counter trend in the premium of the leg in the demand area. Like it just doesn't quite make sense. So at this point, man, all it boils down to is if this demand breaks, if and when it breaks, we're going to be looking for supply trades. Okay. So now we got to start to see some sort of a pullback, right? Okay, we've taken liquidity, right? Equal low, equal low, equal low. We've taken all the liquidity. So what's next? What's the next move? Somebody want to, what if this was printing right now? No, but not even just that. If this was printing right now, exactly like this, what would be the first thing you'd want to do to be able to select an area to trade from? Yeah, okay, good. So we've broken, right? We don't know exactly when this is going to stop printing. So let's just see when the candles start, obviously, there we go. So we've basically started moving right after this. So now we're seeing some sort of a pullback, and it's to no surprise. And the reason why it's no surprise is because we've now just taken all of this resting liquidity, we've induced this area or swept this area. Now this would only be solidified as a sweep if we broke structure. But let's think about this from the supply side of things, right? Which is the whole trade idea. We're at the top of market structure. What have we just done at the top, right? So this narrative is built off the fact that, okay, we've had this area right here. We've essentially induced these highs, right? We've induced this high, and then we've followed it by a break of structure, right? And structure, the lowest point before the break was right here, right? So if we've had a break of structure, this is actually a change in character, right? So if we have a change in character, higher time frame, swept liquidity into the POI, and now we have a premium and discount of the leg, where can we trade from? Where's the areas? If you had to put a limit right now, where would it be and why? Or just where would it be? And then we'll talk about why. Okay. So what's this right here? So this automatically, this is no good. Okay. Because of the equal highs, there's absolutely no reason to put a limit order on these levels. Okay. I'm talking about limits. I'm not talking about like confirmation entries and stuff like that. I'm talking about limits. If you had to put a limit. So now what you got to remember is if you put a limit up here, right, you're exposed to the same thing. You got equal highs, right? So equal highs, equal highs. Where's the only place you can put a limit right now that would kind of make sense? To me, this is the only viable, and the reason why this level, what makes more sense is because, and again, I would never put a limit on this. I'm just talking this through. I'm talking this thing out so that we're all on the same page of, okay, let's build the narrative, right? So if the narrative suggests that we have equal highs resting right here, let me just go like this, equal highs resting here. Okay, and then we also have equal highs resting, and where's my thingy? Equal highs resting right here. The only place that there was some sort of a pause within the market that could be used to induce into is this level right here. Okay, again, no reason to put limits on, but I'm just talking this through, making it make sense, creating the narrative so that we can understand what's going on. Doesn't it sweep the high with the last wick? This one right here, there's still equal highs right here built up, right? Oh, yeah. I mean, you could say, yeah. I mean, that's not a sweep. You know what I mean? Like this is like a very, very tiny piece. Like this high could potentially get ran as well, by the way, because these are relatively equal highs. You know, there's been a very, very small sweep, but the follow through is what makes it a valid area. So basically anywhere from here to here is where I'm going to be looking for my trade. So let's actually go to the 5 and see if there's anything there that makes more sense. So you can kind of see, obviously, what makes a little bit more sense here would be kind of like in this inside bar area, would be the area of interest to be able to potentially take a trade from. Okay, let's go like this. Just map our supply. Yeah, we've tapped in a little bit, you know, partially mitigated, but that's where the 1 minute refinements kind of come in, right? So when you start to see it and you see that, do you care if the bearish change of character is also a sweep of built up lows into unmitigated demand? Not really, because structure should be controlling this market, right? Especially because we're leaving from higher time frame supply. You know, we had all kinds of options here, to be able to hold. So am I worried about it? Not crazy worried about it. And this is why we would wait for confirmation, is because I did see this down in here, this little level, but ultimately, yeah, we could have swept equal lows. So this is why, you know, putting limits on this just doesn't quite make sense. We're looking at something that can deliver criteria within this area up in here. So that's kind of how I built this entire narrative, and this is how I got into the trade that I took. So basically, once we get up into this region, there's a few different ways that we can trade this, right? So, okay, we come up, So we've taken, like, I mean, think about how the market operates, right? If we've just taken all the liquidity right here, what have we done now? We've created equal lows, right? Which creates equal lows, which creates equal lows, which creates equal lows. You get the picture, right? So ultimately, this is now generating liquidity that we need to be able to facilitate this higher time frame narrative and this higher time frame move. So when this happens, let's just play through and just kind of wait for our area to deliver. Now, again, with these relatively equal, I'm sure it depends on the data feed that you use. Maybe Oanda, maybe FXCM. These might be equal highs. This is not enough of a sweep. If this swept up into here and then came down, I would say, yeah, this is an area that we could probably look to kind of trade from. But ultimately, the bottom line is we're looking for something to kind of deliver criteria like this to be able to get into the trade. Okay, so let's go like this, get rid of this guy. Oh, goodness. And we'll watch ourselves come up into, okay, we come back down. So right now, we're reacting to this sort of level right here. We've tapped in, up move before the down move. Just to say tapped in, we get a reaction. If this would have taken this low, I would say that you could potentially look for sells around here, but ultimately this will probably get induced coming up into the extreme at some point. So it's all about understanding where your targets are. So if you want a higher time frame target, it's going to require you to sit on your hands longer, right? So if you want to see this kind of come down into here, we failed to take the low, which means that this high would be weak. We now induce all of this. You got to remember that now we've got to break structure, but now we've created more liquidity to be able to make this higher time frame move happen. So again, piecing together the story is obviously why this is so important. So we'll see what happens here. I don't know if the low goes on this or if it just, okay, so now here's this is interesting, right? So now we've kind of got like what looks to be a potential sweep, right? We've kind of taken out these very small equal highs resting right here. Okay, so if that's the case, what level needs to break to get into a confirmation entry, right? So for me, it's going to be this guy, right? So if we did this and then immediately broke this, I would say that, yeah, there's a possibility that we can look. Potentially. Now let's just look at the premium and discount of the leg again and just make sure that this aligns with it. Yeah, so we are in the discount of the leg, or sorry, premium of the leg. So it makes sense to, if we see like a break of this level right here, you could maybe look at something on this wick. But now you got to remember, you're exposing yourself again to potential equal highs and built up mitigation. So we'll kind of cross this bridge if and when it comes. Okay. So we fail, we're going to run this, right? So you can see that we're kind of building up liquidity on the top side on the mitigations, but we're also building up, these sort of mitigations here with the equal lows combined so that when we do come up into these levels, then we can start looking for something a little bit more substantial, right? Okay, haven't broken. Okay, possible sweep again. Who knows, right? There's a chance that we could consider something here, but now the more and more that we build equal highs here, even if we broke like this, I'm still concerned about the fact that this is all going to get induced at some point, and I'd much rather not become liquidity because, like I said, I have a 2-stop limit, and I just don't want to be in a position where ultimately I'm wasting, kind of like what I did today, and it kind of screwed up my whole session, getting into trades that just don't really make sense, right? So let's just see what happens here. Okay, so we end up pushing right through. We got equal highs built right here. Let me just kind of move this guy over just to clean these guys up a bit. You know that we're reacting to higher time frame supply. We've taken liquidity and induced the highs. So once we get into, okay, coming up into this, I can probably refine this guy and just say that, okay, well, here is the next little area in which we're looking to potentially see if it holds, right? Because now what happens is if we come up into here and we come up and mitigate this and then we fail to take out this low, let's say, what does that mean about these highs? means they'll probably get swept again, right? And at what point do we think that we're going to stop sweeping? So if that was the case and we swept up into here, I would then need to see this break before I could even consider getting into a trade, right? For the same reasons as over here. Okay, so right now we've tapped in. Obviously, this is a failed reaction. We've run the liquidity. And now what we're going to do is say, okay, well, what level right now? So where did we break structure? Right? We broke a small substructure piece right here. So if we've broken this small substructure, right, this would be solidified as a sweep of liquidity if what level broke? Yeah, cool. So if we break right here, this will no longer be a break of structure. It will actually be a sweep of liquidity, right? Because it'll show that we've basically come up, we've induced equal highs, we've broken structure, creating strong high to trade from, right? We'll see what happens. Okay. This does not need, this little, this darker red doesn't need to hold. We could easily do something like this and break down and look at the same thing. But the higher up we go, the more exposed we are now to equal highs. So it's just about piecing together things that will allow you to get into higher probability setups in terms of not becoming liquidity, right? So here we go, start to break down, tap into demand. Ding, 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 there it is. Okay, where's your order going? First of all, do you want to put an order? If so, where? What's that? Well, not really. I mean, you got to think about this. Like this is only the second time. Like there is liquidity resting above the highs, right? You know, these little highs right here. This is a single candle tapped in, and is there liquidity above it? Of course there is. But the thing you need to ask yourself is, okay, there's liquidity everywhere in the market. If you got to be able to piece together a narrative that makes sense with liquidity. So if right now, for whatever reason, let's say we tap into here, okay? This is not demand because demand did not take out anything up here. So this is where demand should have held from, agreed? So if that's the case, we come back down here and we mitigate this last little piece of unmitigated area, and then we come back up into here. Where's there going to be more liquidity, here or here? So, and again, across equal lows, right? So this is kind of how I've pieced things together. Yeah, this is when the third tap scares me. Well, you got to understand what's happening here from a higher time frame perspective, right? So we've induced the highs, we've came down, we've changed character, creating this as a sweep. So this entire area is a sweep area, and now we've broken structure. Like this is just confirmation entry. This is arguably, you know, one of the cleanest setups that you can take. You don't have to really worry about, you know, third touch or anything like that. I mean, ultimately, this is just a little like, you know what? Don't let this area confuse you. Okay, take that off. Here's your POI from the 5-minute. We've now tapped into the POI. Where's the liquidity right now? If this was not circled, where's the liquidity sit? If this went up into, yeah, it's above the high, right? So if we came up into here and then came back down and still broke this, still creates a strong high because demand should have held here, right? Process of mitigation. Look at this low created this high. We did not break this low. This low created this high. We did not break this low. This low created this high. We broke this low. These are the things you got to talk about. And man, I literally talk to myself while I'm trading all the time. This is the low that created this. This is the low that needs to break now. We've now taken liquidity. That's perfect. That's exactly what I was hoping to happen. And then once we break structure, it's a no-brainer. You just trade your criteria, right? And it doesn't mean it's going to work out, but it more often than not means that we're going to tap into here and produce a reaction that'll be able to get you over to break even. And that's what the name of the game is, right? Okay, so let's go and what was I doing? I'm going to redo our markups here. So now we've had a, this is a sweep or an induced level, right? We've induced these highs right here, right? We've taken the liquidity from above them, induced the high, and then basically solidified this as our change in character. So if this is the change in character, where do we change character from? Well, it's up in here, right? So what I would do in this case is say, okay, there's a couple different things, but I think the best way to do it is say, okay, well, ultimately this is the move right before the momentum. So this is kind of where I put my limit, and then stops just above the high. That's it. That's all. So this goes over to here like this, and you can put your limit order sitting like this. Oops. You got imbalance to fill. So you got a 1.4 right to the pip. You know, you want to give yourself some spreads and stuff like that as well. I think 1.6 is kind of where I ended up with it, if I'm not mistaken. And then we're going to look at targets in a minute, provided we even get tagged in. Everybody understand how we've kind of built this story up into this point?
Yeah, hi Tyson. Basically, I did understand all of this, but once we're all done, I just have to ask something, if that's okay. Yeah.
Do you want to ask now?
Basically, as I said, I understood most of it, and I do sort of get it. And as I said, I did pass my funded account, both stages, got my live account, and everything. But I have this self-doubt still that I just passed out of luck or something.
Okay.
How do you deal with that if you've gone through this or not?
Well, let me tell you something. You kind of make your own luck in this game. You're not going to get lucky enough to pass a challenge. The challenge is not designed for you to pass. You know what I mean? It's designed to make $1,000 or whatever the hell it is on every single time you purchase it. So I think what you need to do is trust your ability, because you've literally put yourself in a position where you've passed arguably the hardest Forex test that's available. And now they're going to literally give you their own money, right? Like they're not just giving that to anybody. So I don't think you pass out of luck. I think you just have a hard time accepting the fact that you're at a level where you can actually acquire capital. So what needs to happen is, if you have a trading plan, which obviously you do, otherwise you probably wouldn't have passed. Would you agree you have a trading plan?
Yeah, it's literally exactly as what you sent us at the beginning of masterclass.
And has it been serving you?
I've been sticking to it, yes, but it's
it
just
works, right?
I'm finding it a hard time to believe that I've actually passed.
Well, I'm going to tell you something. When trading is there's nothing glorious about trading, right? It's such a systems based approach. There's stuff that is a little bit more up for interpretation, liquidity concepts. They're not really touched too heavily in the trading plan. All the trading plan does is get you into trades. Management is kind of where you got to do your thing. And basically the sessions like this are for showing you how liquidity works and how you can use it to your advantage. Now, with that said, your edge is there, man. You've already paved the way for your edge. You've proven it. Now it's just about looking for so do you document your trades?
Yes, I've been journaling them.
Okay. So if you journal your trades, do you have a specific setup that you like?
It's literally what we're going through now.
So is there any reason to not trade just this setup?
Not really, no.
You kind of answered your own question, yeah?
Yeah.
So if this is the setup that is most reliable for you, it's the one that you're most confident in trading, is there a reason to take any other kind of setup?
No, but I feel like
these deliver every day, man.
Yeah. It
makes sense. They really, really do. I can't make it up.
Yeah.
You know, so, but here's the thing, you got to wait for the setup.
Yeah.
That's what it boils down to. And if it doesn't show up, it's not going to show up every single day. I would say 4 to 5 days of the week, you're going to see it, whether you're trading London or New York or both, for that matter, if you just have POIs that you like to wait for, whatever it might be. But bottom line is, how many times have you seen this exact setup show itself in your entire trading journey? It's all the time, because this is how the market operates, right? It's not fancy. It delivers the same, but people are so impatient. And I'm living proof as well. This morning, I didn't even trade my plan this morning. I just got into a fucking trade because I was on the live stream with you guys, and I was like, oh, I'm gonna take this hot dog of a fucking move that doesn't fit my trading criteria, in all fairness. And you pay the price. And there's gonna be times where you do it. But here's the thing. If you really want to keep your account, what I would suggest, and I've kind of gone over this a little bit in the past too, is your first trade that you take every single day should be 0.25%. Okay. If you win that trade, if you want to bump up to 0.5%, you don't need to risk 1% a trade. If you're using a 50K, 100K, 200K account, man, unless you got a very bad drug problem and you need like thousands and thousands and thousands of dollars to be able to just kind of keep your habit going. And if you do, you do, whatever. It's none of my business. But bottom line is, 0.25% risk on a 100K account is $250. 1 to 5 is what, 2,500? What's the math on that? 1 to 10 is a $2,500 a day. Cut that in half, $1,250 on a 1 to 5. That's big money, man. That's a lot of money. So kind of going off the deep end here on this topic, but the bottom line is you got to have some sort of structure. And what I mean by this is, if you say, you know what, I'm only going to start trading at this time. I'm only going to risk 0.25% on my first trade. I'm only going to allow myself to take 2 or 3 losses or 4 losses or 5 losses, whatever you decide it's going to be. The more losses you take, the more you're going to chase the market. So for me, because I have a bad habit of chasing the market and kind of revenge trading and stuff like that, 2 losses, like that's it. I'm done for the day. 0.25%, 0.5%, 1%, doesn't matter what it is. If there's 2 losses during the session, I didn't understand what was going on. And then I just go back test the session, and then I move on and go into the next day. A lot of people think that, one day is going to change your entire life, and it can, but usually for the wrong reasons. Usually puts you a lot further behind than it does ahead. So knowing when to just kind of shut the markets off is ultimately your job as a trader. Hopefully that's helpful. But yeah, I think, man, you've got the skill set. You've proven it. Obviously, that's why you got funded. And now keeping it is going to be the mental game of literally just doing exactly what you've been doing.
Yeah, thank you very much for that. Yeah, as I said, I think it is that I'm just finding it hard to believe that I've actually got funded.
Yeah, it's a pretty surreal feeling. I get it, man. But you know what? The function of executing trades and managing trades is the exact same. It's just a matter of just make it feel like it's still demo. You know what I mean? Like it's not different. It really is not different. You're not trading $5 million. You're trading what? How big is your account? 50K?
Yeah, just 50K.
Well, it's not just 50K. 50K is a lot of fucking money.
Yeah.
It's great. But let me tell you, risking 0.25% on 50K, man, you can make a lot of money with that. You can make a lot of money. And what I would suggest doing is, do you actually have your credentials already?
Yeah. I just didn't take any trade today because I wanted to take my first trade as high probability trade.
So take all your trades that way.
Just waiting for that.
Yeah. And there was no, in all fairness, there was no high probability setup today. Agreed?
Yeah, that's why I just didn't take it. So I thought, and the other thing was it's Friday, so I thought I'd just wait for next weekend then. Next week.
For sure. Don't put one of the biggest things I think people, myself included, do when they get funded is they marry the idea of the perfect trade needs to happen for my first trade. If you lose your first 3 trades at 0.25%, that's with commissions, that's 1%. It's not a big deal. You know what I mean? So put yourself in a position where you're going to take the same setups that you've been taking this entire time. Don't try to make them better. Don't try to make them worse and chase. Take the setups you've been taking. That's the bottom line, because it should be no different. I know we're kind of going off here. It's totally okay if we have to stay a little bit longer. I don't mind, but this goes for everybody, by the way. Once you're funded, which you most likely, I would say close to half of you will be early next year, getting into the first few months. The bottom line is, you know what? There's no difference than passing the challenge, passing phase 2, phase 1, whatever it is, evaluation, depending on who you're with, and actually live trading. There really is no difference. And that's the craziest part. The difference is, if you think there is a difference, you know, it's the whole yellow car theory. You think of yellow cars, you're going to see yellow cars. You're going to create problems for yourself that don't actually need to exist. If you can define in your trading plan that this exact setup right here, look at this. Okay, we have a high, failed to take a low, swept the high, broke structure, change character. We got premium of the leg right here. We induced equal highs, liquidity sweep with a change of character again. If you wait for this exact setup, how high of a probability of a setup is this? It's the highest one in smart money. In my opinion, there's no higher probability setup than this. This is like the most textbook fucking play that you could ever take. Does anybody disagree?
Agree, man. Agree, not disagree.
This is the sauce. We always joke about this in the Telegram. This is the sauce right here. This is the one. This is, if there was one trade that I could trade for the rest of my life, the setup, this is it. I have a few different setups that I like to trade. And this is, you know, man, I've been trading for 7 years. You know, I don't know how long you've been trading, but there's going to be a lot of things that are going to change and get refined and get expanded. And just know when the right time to do that is. Once you get comfortable with your trading setups the way they are, and you start to see, oh, well, you know, this seems to work out a little bit more often than not. I don't trade this way, but I'm gonna go paper trade it. I'm gonna go check it out. I'm gonna go back test it. And it seems to work out more often than it doesn't. And it's you know, an additional entry criteria that you can actually take, then start doing it. But don't do it without back testing it, right? If you only like this setup right here with a sweep, chalk, induce, and then break, I'm going to tell you right now, you don't need to trade anything else but this. Even if it only shows itself 3 times a week during your time frames, I am sure, and I'm sure you can agree with me, it delivers itself at least 3 times a week.
Yeah, definitely.
So 1 to 10, you know, probably even more than that, because you're going to be getting in at the top or bottom. Usually these are 1 to 15s to 1 to 20 that you can hold full volume. You know, do the math. You know, your first trade of the day at 0.25%, your one after that. Once we actually start doing this and we pull back and we take the continuation with the same model, well, guess what? Now you risk 0.5%. Now you got this risk covered with this one right here. So there are technically 2 break-even trades, right? So, and if you lose out on them, just walk away. Just walk away. Come back tomorrow. Don't even look at the charts. So cutoff times are, fuck, I'm sorry we're going off here, guys, but this is a really important conversation to have. You know, you got to have a cutoff time. First and foremost, you know, for myself, it's like absolutely, I shouldn't say this. You know, there's times where I'll do it just to kind of fuck around and back test like a seconds entry or something like that, or a forward test rather, or live test a seconds entry, but it's a very, very small amount. So the majority of my trading gets done. There's no trades executed past 10:30 in the morning Eastern Standard. So set some sort of a boundary for yourself and just know that it's okay to come back tomorrow, because the market's not going to go anywhere. Okay, don't put yourself in a position where you're chasing around them, because what's going to happen is if you don't have these boundaries, you're gonna find yourself getting into you know, these destructive self-deprecating habits where you're chasing around the market on really, really low time frames, just trying to force trades out, because then you go into drawdown and then all of a sudden, oh, I'm you know, 2 or 3% in drawdown on the day, but I only need one trade at you know, 1 to 3 with a 1%, and then all of a sudden you get wicked out on a 1%. I'm telling you this because I've done all of this. Like, man, I was not a great trader. I'm still not a great trader. I'm a decent trader. I know how to make money trading, but I've made these mistakes, and this is why I'm teaching, right? So just remember, it's okay to walk away from the charts. And you need to, as a trader, as somebody who's going to go full time, you need to decide when that is. And I think a really, really good benchmark is any 2 losses. And the reason I say this is because if you know that you only have 2 losses to take for the whole session, whether 0.25%, 0.5%, 1%, 5% trade, whatever the fuck it is that you want to do, the bottom line is you are going to be very selective on what trades you take, knowing that you can only fuck up once, and then the second time you're done. Cool. Awesome. So that's it, guys. Just like
Thank you.
you need to keep yourself in check. Your job as a trader is to constantly keep yourself in check. Set a timer on your phone. You know, every 15 minutes, set a timer during your trading session and just say, hey, have you been on the 1 minute for the past 15 minutes? If so, have you looked at the 15? You can literally write that in a timer on your iPhone or your Android. You know, God bless your soul if you're an Android user, but that's a story for another day. Bottom line is you need to have structure. You know, most things can be automated within trading. And I think where, you know, a lot of people kind of get lost in the sauce is they think that there's going to be the one trade that saves their life. Okay. And dude, it's just not going to happen. You know, take break evens. Put yourself in high probability situations where you can move to break even almost immediately. Otherwise, don't take the fucking trade. And if it doesn't take liquidity first, what's the point in taking the trade? You are exposing yourself to equal highs or equal lows if it doesn't take liquidity first. Anyways, that's my rant. You'll be able to rewatch this. You're going to be able to hear my fucking voice going off about this. But the bottom line, like I said, just to kind of recap this, create a set of rules. Everybody's rules are going to be entirely different from you know, your colleagues. The bottom line is know yourself, know who you are as a person, and make sure that your rules are ones that you can actually follow. Okay, start small and then ramp them up. If it means, hey, I only want to take one trade per day and I'm going to wait for this setup, and if it doesn't work out, I'm just going to come back tomorrow. What this does is creates structure. If you don't have structure in your trading, you can have the best trading plan in the world. Everybody's got the same trading plan. Okay, I got funded with this trading plan. Means all of you should be able to, but you need to be able to follow rules. And if you can't follow rules, I mean, this might not be for you. Let's keep going. Okay, back to this. Change of character, induced high. I mean, hello. Change of character, come back into the low, induce these low. Sweep of liquidity, change of character. Like, do you guys get picking up what I'm putting down here? This setup is always available. It's always here. You're better to take it in line with this distribution that's happening to potentially put in new lows. So if that's the case, everybody okay with this right here? Can we put an order where we're at right now? Cool. On the flip side, you guys want to talk about seconds? Let's see when we get tapped in here. If and when. Okay, so we get tagged. Okay. Okay, so at this point right here, if you wanted to, guess what you can do? You can go down to this. I don't know if it's going to deliver, but when you have a 1 minute POI like this, if you really wanted to, you could say, okay, well, we've now swept above the high. We've produced a low. So where could we now put an order, right? You probably look at something. Let me just see what it ends up doing here. But you could probably put an order somewhere in and around here, just covering this high. Okay, maybe a 1 pip stop. But you can see how small of a stop you can actually get, right? Or what you could do is on this first down move candle like this, you could literally just cover this block like this and keep yourself a 1.4 pip stop now instead, right? Let's just see what happens. Okay, tap in. Nothing really crazy that delivers here, but I just want to show you the 1 minute POIs. When you have these areas and you're unsure, you don't want to, maybe you don't want to put a limit because you're worried about the, you know, equal highs, let's say on the 1 minute, something across like this. There's other ways that you can do it. And one of the most effective ways is if you have a 1 minute area that you're interested in getting into, jump down to 5 second. 15 second won't really serve you. It's going to happen too quick, especially if there's a lot of liquidity built up in the opposing direction. This is what I do. There is pros and cons, just like this example. Exactly, man. You know, it's with the amount of liquidity kind of tugging down on the market. Like, look at this. You know what I mean? Like, you guys are seeing the same thing, right? Equal lows, mitigations. There is a lot of orders pulling the market down to this direction, right? So if that's the case, limit orders are more than enough to put on, because what's likely going to happen is we're just going to rock it. The limit make a lot of sense. Yeah, the limit makes tons of sense, right? Because this is just what it is, right? Like, I mean, this is just such a reliable setup. This is the most textbook supply and demand setup that there is. Wyckoff, this is a perfect Wyckoff distribution setup. Anything that to do with smart money, this is it. Like, this is the exact setup that people, this is like the magazine, the cover of a magazine setup. You know what I mean? Like, these are the ones you're after. Okay, so we're tagged in. Let's go figure out a target. Okay, so don't tell me where. What's the first thing we want to do to select a target here? Yes, awesome. So what do? We say, okay, because in theory, the idea behind this trade is that we should be able to break the low, but we want to pay ourselves. So the best way to pay ourselves is, okay, if we're pulling back from supply, in order for us to look for longs, we need to be in this area. So that's the discount. So if this is the case, the first area in which we should be taking profits would be right around this equilibrium. Okay, that's it. Nothing more, nothing less. You can see a nice order block resting in here, but ultimately we need to tap into this first before we can even consider going higher, because this will now be the discount of the entire bullish leg that broke this structure. Okay, it's also yeah. Anyways, that's basically it. So let's go like this. The idea is that we will break the low, but we're going to manage risk accordingly, and I'm going to show you how to do that and why I managed the way that I managed with this trade. Okay, so let's look over to the left. You can see, yeah, sort of in here. Okay. So you get tagged in. What is this, a 1 to 10? It's a decent trade. No, could be worse. Okay, come up and mitigate. As soon as this low gets broken, okay, what are we doing? Break even. The other way you can manage this is at 1 to 4. Okay, but you can see that, you could take a partial 1 to maybe down in here if you really wanted to. Totally up to you on how you want to manage this. Okay, there's no right or wrong way. Oops. Oh, there we go. Yeah, 1 to 10. There we go. There's no right or wrong way. This is totally personal preference. With this, what I ended up doing, I can't remember what I did. I think I just went over to break even once this low went. Because of the amount of liquidity, we should not be coming back up here. Plus, it's already mitigated. So if we come up to mitigate again, chances are it's going to get ran into the top, and that way I can look for some sort of a better setup from the extreme, right? Apply price. Okay, so broke the low. Okay, like this. Stop loss, break even. When you hit SL at break even on your magic keys, it's actually going to put you about a 0.1 or a 0.2 pip in profit to be able to cover your commissions. So just remember, and when you look over on your MT4 terminal, just remember that this is what it's going to do for you, right? Automatically. So if you want to just keep it and you want to pay your commissions, that's fine. But the way that the preset parameter is that I made was that it covers my commissions as well. Okay, so just be mindful of that. Okay, stop loss, break even, or 0.1, 0.2 pip in profit. Okay. So we're down into the low. Okay. This is technically got a small bit of demand down in here. And the reason I say this is because technically we broke this level, right? Now, with that said, if this low failed to take out this high, what does it mean? It means it's going to be weak. If you look over to the left, we now have equal lows. Is this a viable place to hedge a position? No, because we're exposed to liquidity, right? The whole idea of hedging is that if we swept this low and came up like this, then we could look to hedge this position, move over to break even with the idea that we're not exposed to equal lows, okay? This is what I do, pros and cons. So, okay, thought there was a question, my bad. Okay, so tap in. Okay, reaction. Where does supply kind of control the market from? Up in here, right? So if we were to break, if we came like this and then failed to take out lows, I would be a little bit concerned, but we're already managed anyway, so it doesn't really matter. So let's just see what ends up happening here. Okay, so we kind of got supply resting in this area right here. That's unmitigated supply. Okay, so we tap in, you know, ultimately maybe 5 seconds, you might be able to see something. So look at, we've chalk right here, right? Supply turning into demand, flip, probably could have potentially put an entry right here because we know that the low is weak, right? Give you a 1 pip if you wanted to. Again, not advised. I'm just saying that there's options provided you know what to do. Let's see if this ends up getting swept out. Probably not. Anyways, you get the idea. There's always going to be options to be able to get in. Okay, so at this point, we're watching price. Remember, every time we print a low across, we're creating liquidity, right, to be able to fuel this move. And like I said, if for some reason we tap into this, we pull back and then swipe through like this, well, we still have this extreme that we could trade from, but we're putting ourselves in a position, not that they're high probability setups in terms of they're going to run directly to take profit, but they're high probability setups to be able to at least make a conscious decision to say, I need to move to break even. I need to mitigate risk. That's ultimately, in my opinion, the best traders, this is what they do. It's all about risk management. It's all about saying, okay, we're reacting to this. If we fail to break this low like this, for whatever reason, I may manage just above here to lock in a little bit of profits. You know what I mean? Because at least this way, you know, if we sweep it, well, actually, you know what? I'm thinking about that now. We still have this wick up here that could potentially get mitigated. So for something like this, I think I would probably keep my stop loss still sitting at break even, knowing full well that if we break above, we could easily just induce these highs one last time, creating all this liquidity down here to be able to sweep and then move a little bit quicker to the downside. But you can't sit here and wait for these things all day long. This delivered criteria for us, and we just need to take those high probability setups that we can at least move over to break even with. Okay, start reacting to the low. Maybe this is what people view as a chalk. We got equal lows, man. We didn't sweep. If we would have swept, I would have been a little bit nervous if we would have did this and then broke, because then that might have created a strong low that could have induced all these highs. But that's not how it's delivering, right? It's delivering with equal lows. That means that this is no good, in my opinion. We're reacting to higher time frame supply. We've induced, we've changed character, we've had confirmation entry. Yeah, this is game over. Built up liquidity. A lot of people were nervous about this. What are we going to do? Think about this, okay? If we have broken this little piece right here, okay? Where do you think we should run up into if we're going to purge all this? Probably the wick would be the first area. Would you put an order here? It's not something that I like to do. But let's just see if it ends up working out. Just for argument's sake, we'll just keep this whole area right here. You can see that we haven't mitigated it at all. We're kind of coming into, it's not a demand. Well, I mean, depending on who you ask, maybe this is a small piece of demand. It's an area that we could produce some sort of a reaction to deplete the remaining orders. And especially with the built up mitigations, we can see that we're having a hard time kind of breaking down in a quick fashion. So how do we end up taking out equal lows? Well, first we should probably see some sort of a sweep, right? Creating equal lows across the bottom now. Let's go like this. Right? We're giving more reason for price to want to travel in the direction that we're hoping it does, right? Now, again, this is dicey watching it, but just know that it's okay to take the break evens. Who fucking cares if it happens? Right? Come back up, mitigate. Again, built up mitigations. What do we do with built up mitigations? We take them out, create equal highs here. Let's see if this gets swept. Okay, so it looks like we're going to take the lows here. Okay, so we've taken the low. Nope. Now we've taken the low. Okay, so at this point, let's just get rid of this shit here. We're not expecting to come back up here. Terms of management, a couple different options, right? So we've got, the week low that sat right here. Some people like to take partials at the week low, right? This is what expectational order flow was suggesting, right? So if we think about this low created this high, which created this low, which broke structure, right? So we've come up and we failed to take out this high right here with this high. So what is this high going to be right here? This should be strong and this low should be weak, right? So a lot of people say that, your first take profit should, and again, this isn't how I managed it. Doesn't mean that it's wrong. It just means that, you're more than welcome to consider taking some profits at these levels, take a 0.25% off, right? At this level. 0.2 or sorry, a quarter of the position off. Nothing wrong with that. Who cares? Let the rest run, right? So guess what? We start running into this. Personally, I'm only taking profits at the discount of the leg. Okay, we start to fall. We come back up. Okay, so we're going to start looking at, okay, well, what's going to happen next, right? So where does structure was broken here? Where's the unmitigated level? Yeah, that's kind of where I'm looking. Doesn't mean you have to take trades here. It just means that in theory, we should not breach this level, correct? So does it make sense that we can move our stop loss down to somewhere in and around here? Don't worry about equal highs and stuff like that. I mean, bottom line is we should not be able to break above this, because when we break structure, what do we usually do? We follow that process, right? We follow the process of mitigation. We've already broken structure the first time, come back to the origin. Now we're just going to break down, right? Because we have the story built that there's liquidity available for the market to seek. Okay, so let's just say, for whatever argument's sake, if you wanted to manage this, you haven't taken any partials, I would say you can manage above here. You do have a little bit of equal highs, so maybe manage just above here. If you're worried about maybe coming up into this, then manage just above this. This is kind of like the origin of that move that has a little bit of imbalance sitting here. If you wanted to just manage above this, technically we shouldn't go above this wick. So let's just go like this. Put this across like this. Okay. So we're locked in at what? 1 to 4, 1 to 5, 1 to 3. Not terrible. Big deal. If it doesn't go our way, then we just wait for our next setup. Okay. Get the tap in. Okay, where's the new structure high? On the 1 minute. So again, just exposing you guys to different ways to manage. Find the one that you like, right? Personally, if I've built the story, I've spent the entire session building the narrative, I'm okay with holding. I'm also okay with going break even on the day if I have to. Doesn't matter. Partials should only really kind of be taken down in at least the discount of the leg, in my opinion. But again, totally up to you. This is something that's going to take a little while to build that confidence. It's not, management is, the only true art form of trading really is how you manage positions. Let's see what happens here. broke the low. Where do we go now? Yeah, why not, right? There's no reason you can't. It's up to you. Again, I'm just showing you different management styles. Personally, I was still sitting up at break even at this point, just waiting for my partial, but I'm just showing you how the different management styles can work out. You know, sometimes it's favorable, sometimes it's not. So let's just look. So first take profit is hit. So when you take a massive partial, this should come off. In my opinion, you should just leave your stop loss, because look at, we have all these built up mitigations here. We could easily come up into this wick, create equal lows across here, and then take a scale in, depending on how it delivers, right? But the bottom line is now you got to remember that, okay, we're in the, let's go to the 5 minute. We're in the discount of the leg, right? So if we're in the discount of the leg, we kind of got a small, you know, maybe a demand level in here, but ultimately the bottom line is we don't need to be in demand for us to see a change in character. It's ideal if we do, but the bottom line is if we come down into this level and for whatever reason we see a chalk on like a 15 minute or a 5 minute, technically we're pro trend, right? We're moving like this, potentially putting in a new high, right? Until the low is broken, this is not going to be a strong high, right? This should just melt off from here. We should not see changes of character on any time frame, especially in the discount of the leg. So if that's the case, I mean, what time is it here? It's 11. Yeah, so pretty well, you know, take 50% of your profits there, and then ultimately I was letting the rest run into a 4-hour week low, is what I thought, which didn't end up delivering. But I'm not going to go too much further. We're like 12:54. I'm going to see if we have some questions first. But yeah, that's essentially, I mean, I think we know how this ends up going. Let's just see where this sort of change in character would happen if and when it does. Okay, so you can see that we've potentially got a chalk here. So if that's the case, you know, you could potentially start looking for some long setups in these regions, right? So right here, right, no problem, up and away. And as soon as we break the high, we're going to go to break even, right? Because now this is counter trend within counter trend again. So let's go like this. Just say that you know, let's say we took the 50% of the block so that we can cover the low, right? To 2 pip stop. Okay, whatever you want to run something up into here. I don't know. Like maybe we just follow it with stop loss. Okay, get tapped in. Okay, reacting to the high. That would make me nervous. So if we're reacting to the high, guess what? Break even. Boom, start breaking. Okay, then I would start saying, okay, well, if that's the case, like where are we at right now? Like, should I be taking a partial 1 to 2.8? No, probably not. So I'll just leave it at break even. And if I get swept out of it, it doesn't really matter. I mean, at a really good price, right? Okay, taken out a break even. That's cool. Let's reevaluate. What do we have to do here? We've actually broken, creating a potential for a strong high means that this low could potentially get ran, correct? So if that's the case, there's the low getting ran. Not quite a chalk. I don't really like that personally. Okay, there's your chalk. Strong low is down in here. Anyways, you get the point. I mean, this is getting deep into the trading session, so don't want to go too far. But the bottom line is, you know, this trade was available based on the fact that we came into the discount of the leg. Oops, right? Discount of the overall, you know, counter trend leg. And we delivered a change in character. So if that was a change in character, creating a strong low, we can almost guarantee ourselves that we've tapped into demand, and that can produce a reaction that is good enough to be able to put ourselves into a break-even trade to hedge our position. Now, I don't typically take hedges, but I want to expose you guys to a number of different ways, and this is more for management purposes than it is for anything else. It's not about making money on both sides. It's about saying, okay, well, I've taken 50% of my profit off at this level. We've now seen a change in character. I'm going to jump into this long so that I can say, okay, well, if we, for whatever reason, come all the way back up and take us up for break even, I can then actually take a partial at this level from this position and say that we've essentially covered the losses that we've incurred on this. So you can kind of get where I'm going with this. I mean, management is everything. How you view management, how you take trades to counter or hedge your positions. This is ultimately up to you. I'm showing you setups. I'm showing you how to essentially get yourself in a good position to take break-even trades. That's what good traders do. Nobody knows where the profits are going to get taken. We can have any kind of fancy profit taking setup that we want. Doesn't mean it's going to deliver. Bottom line is you got to be able to put yourself in a position where you're not exposed to equal highs, equal lows, mitigations, liquidity, and put yourself in a good position to be able to essentially get yourself out of break-even trade. That's really one of your only sole purposes as a trader, is to be able to see trades through and move over to break-even. That's it for today, really. Not going to have time to really go over today's PA, but I will do a small breakdown of it. I also have yesterday's to go through, so I will do that for you guys. Maybe today. I got Christmas lights to hang up outside and stuff like that, so I'm not sure if I'll get around to it, but worst case scenario, I'll put it at the tail end of tomorrow's lesson, depending on how we do, and if not, it'll be Sundays, and that's the way she goes. I'm a human too, right? I got shit to do, and ultimately, I hope you guys got something out of this today. Does anybody, I don't need to leave right this second. If we have some questions and stuff like that, man, I'm all ears. If you have anything that you want to ask, let me know, and I'll let you know to cue your mic. Everybody understand and get something out of today? You can be honest. It's cool if you didn't. I just need to know what to do for you, right? Can't cater to everybody, unfortunately. I'm just showing you exactly what I do, right? You know, if we can go full circle on this conversation, anybody who's looking to get funded, okay? Week 6 and week 7 is what we did in the September class. We're not going to be looking to, if you guys want to get challenges and stuff like that in the next couple of weeks, if they've got discounts for Black Friday, whatever, I don't know how any of that works, to be honest with you. If they do and you want to jump on, by all means, you should be pretty close to a level where you should be confident in getting into break-even trades, which is perfect. If you have not signed up for a challenge and you haven't actually signed up for, what do they call it, like their demo account, the practice account, I guess, with FTMO, or I don't know if my Forex Funds offers it. I know FTMO does. If you know how much money you want to manage with any of these prop firms, you should be using a demo account starting Monday. You should get your account today, and you should play it through next week. And what you should do is not have a dollar amount in mind, but what you should do is spend this weekend, depending on if you have time or not, but I think it would be wise to do this now. Spend some time and develop a set of rules for you to be able to manage the amount of money that you're going to be managing. If you want to go for 100K, if you want to go for 10K, 200K, whatever the hell it is, you need to define what your rules are going to be. The rules that you should be looking at doing are not stuff for your trading plan. Your trading plan is going to be solid. I mean, you guys should have a pretty good idea. It's your management. And what I mean by this is, okay, if I'm going to jump on Monday morning and I'm going to start my demo, what are my rules for how many losses I can take? How much percentage I can lose? Am I going to start with a 1/4% risk like Tyson? Am I going to start with 0.5% risk? Am I going to meet them in the middle, go with 0.33? Am I set up to follow my rules? These are questions that need to be asked. These are questions that you need to, I don't really care if you do it or don't. I mean, you, in all fairness, you guys have already paid me. You know what I mean? I'm here to help you. And I'm sure 90% of you can attest to this. I've had one-on-ones with most of you throughout this entire 6-week masterclass so far, and I will continue to do them. But the thing is, you got to do it. I can't do it for you. I can give you the roadmap. If you don't know how to follow the fucking thing, it's going to be useless for you. So make a set of rules for yourself. what are the things that I need to do in order to be successful? If you know that you find yourself chasing around the 1 minute, set yourself an alert. Set yourself a timer every 15 minutes to go off. If you find yourself revenge trading, 2 losses, that's it. If you find yourself taking break evens and then it going to your take profit, you should probably partial at 1 to 4, right? So you can keep your stop loss open. So you need to know yourself, and I can't do that for you. What I can do for you is expose you to different ways of managing things, but ultimately you guys are going to have to tailor that to your own liking. So I don't teach a whole lot of management. I think you guys will notice this. What I do teach is how to be fundamentally sound and how to be okay with taking losses, how to be okay with taking break evens, how to put yourself in the driver's seat of putting yourself in good risk reward trades. That's my job. Your job is to essentially know who you are as a person, as a trader, and be able to develop a plan that you're not going to resent yourself for when implementing the rules. Okay. If you need tips, suggestions, say, hey, I'm struggling with this. I am happy to say, you know what, you should probably look at doing this for your management. But you guys need to really consider, we are in week 4. In theory, we're only supposed to have 2 weeks left. Obviously, you guys are getting a little extra, which is super, super cool. Very fortunate for you guys that it just worked out that way. Use it. You know what I mean? We're in week 4. We're halfway through right now. Get some rules on paper, okay? Because now you're going to have 4 weeks to adjust these rules for when you actually go for funding. Okay, you need to start somewhere. You need to trust the process, and at least hold yourself accountable to something. Because my rules, they're great for me, don't mean they're going to work for you. Okay, everybody's a little bit different, so that's it. I'm just kind of talking in circles here, but it's really, really important. Any questions?
Yeah, I have a question.
Who's talking right now?
AJ.
Hey, AJ.
So are we gonna have this for until the mid January? Is that what you're saying? Okay, so we ultimately get what,
you get like 12 weeks.
12 weeks. Okay. Yeah. So, and did you say last 2 weeks we'll be doing live trading?
It's the last week. So we're gonna pick a week as a group. January 1, we're gonna, New Year's resolution, everybody's gonna go to the gym for a week and then cut up their membership. After that, we'll figure out which week works for everybody. We'll pick either, first, second, third, maybe even fourth week, fifth week, first week of February, whatever works out for everybody. We're gonna hold a vote and we're going to essentially go and do live trading then. We want to see the market pick up in volume a little bit as well. I don't want to be trading a dead market and chasing around range bound markets and stuff like that. So we'll play that by ear as to when we're going to do it. I don't think it's wise to do it, third week of December. I think it would be more ideal to do it, into the first, second, maybe even third week of the new year, so that we can at least see some volume kick up in the market. But yes, so essentially what's going to happen, Pat, is we're going to be going basically up until the second or third week of December, which is going to cover your 6 weeks. We're going to take a break from then until the first weekend in January. First weekend in January and second weekend in January, we're going to have the week 7 and week 8 of the just back testing, kind of piecing everything together, the bonus 2 weeks that I gave you with my screw up with going to the cottage last weekend. From there, we're going to pick which week, if we want to do it within one of those weeks to do our live trading for the entire week, or if we want to do it a little bit after. Collectively as a group, I think it's important that we're all on the same page. Can I do calls after the 6 weeks? Because I'm trying to learn slowly so I can really understand it. So I'm going to tell you something. I need to put up some boundaries, and I'm going to say this right now. You've got all kinds of time from now until the time we do the live trading week to get everything you need out of me. If it means jumping on a call every single day for 15 minutes, man, there's guys that call me almost every day. I don't care. If it works with my schedule, I don't mind doing it. The bottom line is the boundary is going to be set once we start in week, whatever it is, week 9, I guess, technically, with the live trading. After that, I can't be jumping on calls with every single person. You know what I mean? It's just not, it's too much. I need to just kind of set that boundary now. And I'm glad you asked it so that at least but you are going to have your community. right? You're going to have all the guys that you just did all this with. You're going to be pulled together. I'm going to have the Discord channel set up by then. You guys are going to be legacy students so that one day, if I decide to go the Discord channel route, you'll all have access to that. You'll have access to all the videos. Once I hand select the ones from September, still haven't done it. It's not really been a priority of mine, to be honest with you. You guys have got more than enough content with what you've had with November. You're also going to get all of January stuff. You're going to have more than enough. But if I can make a suggestion, if you need help along the way throughout the next 6-8 weeks to get us into the new year, you know how to reach me. I'm a busy guy too. I got shit to do. I'm usually pretty good for getting back in the same day, if not the next day. Compile your questions. Don't be hitting me up every single day if it's silly little question. Like, compile these questions, right? Another good time to ask these questions are during your masterclass. So, not saying don't waste my time, but just be smart about your time management, right? In terms of how you're going to ask questions, make sure that you don't already know the answer. There's not other ways to go about getting the answer. I'm not going to be here to kind of spoon feed you throughout the entire process, right? I mean, our cutoff date is technically supposed to be in December, and I've already been, I don't want to say generous enough, but I've been generous enough to essentially put us into the third week of the new year. So just utilize your time properly. I'm going to tell you right now, man, things should really start piecing together at this point. And the final little stretch here for the next 6 to 8 weeks are really going to kind of put the icing on the cake, I think. I'll pass on my question for another session. You can ask now, man. There's no problem, Hugo, if you want. Up to you, man. No worries. Okay, sounds good. Again, guys, not trying to be a hard ass. I just, you gotta have boundaries, right? We gotta have boundaries. Everybody's got them. You gotta have them within trading. It is what it is. So utilize the time we do have together. Okay. So thank you guys for, again, coming in, listening to me fucking banter for an hour and a half. If you guys ever need anything else, you know how to hit me up. If you're having problems with your psyche or your management style, tell me what your problems are, and I can probably direct you in one way or another. But for now, enjoy your weekend, and we'll catch you guys if you guys want to join in tomorrow. Moving forward, everybody's going to be able to join in tomorrow and Sunday if you guys want, and I'll post the meeting link and join in at your leisure. Okay, have a good day, guys. Don't drink too much beer, and remember, take a day off the charts. Don't forget, take a day off the charts, whether it's Sunday, Saturday, whatever the fuck it is. Make sure you take some time for yourself. It's really important. Have a good weekend, guys. Cheers.